Good morning, students. Good morning to all of you. Thank you, Aishwarya. My voice is clear, students? Perfect, students. Perfect. So let's start, students, then in that case. So, students, the topic, as you all see over here, is about the payment of tax, isn't it? Students, this topic is one of the most important topic. Family, now I'll tell you, students, I have already have shared now the entire GST PDF with all of you. Around 22 or 23 topics. Now you will find students, good morning. Now you will find students, all the topics, almost now all the topics are small topics. So maybe a couple of lectures, the topics will be through. Thank you all of you students. But all these small topics that we are doing it, they are all important as well. They are all important as well, students. You'll say, sir, how do you know that? How do I know that, students? You can see all the PDF file which I've shared with all of you. Okay, by the way, students, those who want the hard copy, 595 is the amount. The colored book I can just courier to you, just WhatsApp me on that. Okay. The point what I'm trying to say is that just see that PDF which I've shared with all of you on GST. So you find for these all small topics, the question which is the past year attempt question, study mat questions, RTP, MTP. So you know that yes, although every topic has got 8 to 10 questions which are from past year paper, RTP and the study material. Kavita, thank you very much. So that way you know that these small topics, so it will take very quickly, we'll finish it off these topics and all. Every topic now that we are dealing going like invoice, registration, import, export, they are all small topics because there are only 2 or 3 sections that we are supposed to deal on that particular point. So on that note, students, I told you that be careful. These topics needs these questions. If it comes, it needs to be pocketed. Now, when I was going through some of your answer sheet of your examination, so many of you have sent me your answer sheet. Students, I must tell you one important thing, which is that in these topics, you don't get marks for guessing. I have seen that either the students like 0 mark is what they are getting it. Now I have seen that they have got 0 marks also on those particular questions for which the answer was 20% to the main answer. So whatever is the main answer, so their answer was 20% to the main answer. In those answers also, the IC has given 0 mark, which therefore I concluded to myself that as far as these topics, small topics are concerned, you don't get marks for guessing. Your answer needs to be 50 or 50% more accurate. That's when the ICS starts giving the marks. And I must tell you that these particular chapters, students can get easily full marks. Easily full marks. Because here there is not much emphasis on the presentation also. Sections are few. You just need to know the provision well. The problem lies that you don't know the provision at all. Or whatever you know, you not have understood the provision clearly. So the absence of understanding the provision clearly is what fires them in their main examination. The absence of knowing the provision clearly. So here, these small topics poses a challenge on the understanding part. That exactly the point. So therefore, students, as I told you, every topic has a different significance. These small topics has a different unique significance. Starting with the topic which I'm doing it right now, which is the payment of taxes. Now, students, so far as the payment of tax is concerned, students. Okay, by the way, those who have ordered the book for this one today, that is Thursday, I'm sending the book to Prime because yesterday itself I completed all the PDFs also. So students, today I'll be sending the book, so definitely you will be getting it now very soon. Okay. Now, On those lines, students, please be careful. What I have told to all of you is this, that students, as far as the payment of tax is concerned, please pay attention now. In the context of the payment of taxes, students, you know that here in the GST law, technically there is no due date by when the tax needs to be deposited. There is no due date by when the GST needs to be deposited. So technically there is no specific provision for the due date of the deposit or the payment of GST. What on the contrary we have as a provision, what we have, students, as a provision is the due date to file the GST return. So by 20th of next month, for 20th of next month, you file the GST return. Now, when you file the GST return on that date or before that date, you will have to make the payment of the GST. So the due date of payment of GST is derived from the due date of filing of the GSTR return. The due date of payment of the GST is determined through the due date of payment of GSTR return. Is that clear to all of you, students? That's exactly the point. So this is what the due date is. Now, therefore, once obviously you know, students, once you don't make the payment within the due date, in that case, students, the interest will come into picture. The interest will come into picture. And that exactly is the point. That is the learning material. So in this topic, payment of tax, you are going to learn 4 particular sections and associated rules. The sections are section number 49, 50, 51 and 52. These are the 4 sections, and then there are associated rules. Now 49 talks about, students, what happens is this, that the government, students, the government at their level, they prepare, students, the government at their level, they prepare 3 particular ledger. So these ledger in the portal is prepared by the government. Which are the ledger which is prepared by the government? One is the electronic liability ledger. The second one, students, is the electronic cash ledger. And the third one happens to be the electronic credit ledger. Now these 3 ledger, again I'm repeating this point, students, these 3 ledgers are prepared by whom? By the government. Okay. That is based on the data. Which data? Data generally given by the taxpayer himself. That is through the return or through the invoice, all that. Or the data which the department themselves gather in the due process. The data which the department themselves gather in the due process. I'll give you those examples, you'll come to know. So therefore, based on those data, the government is putting up the numbers or the figures in these ledgers. Which ledger? Electronic liability ledger, electronic cash ledger, and the electronic credit ledger. So that is what section 49 would be all about. Okay. After 49, students, you have section 50, which is about if you don't make the payment within the due date, obviously the interest is what will come into picture. Section 50 is the interest section. Very important section, students. You'll find many question and answer that we are going to do as the impact on the interest part. And the last one, section, students, 51 and 52 is about the tax deductor deducting the TDS and the tax collector collecting the TCS, that ECO, electronic commerce ECO. So they are collecting the TCS. So TDS and the TCS scheme in section 51 and 52 respectively. I hope that all of you are clear with this one. Every one of you. That's exactly the point, students. That's exactly the point. So students, with that now we will begin with this one. Now, students, you make the notes. When you make the notes over here, ensure that you put this notes in the horizontal way so that the things can be captured properly. Okay. Perfect. So in this context, students, let's begin with this one. Students, payment of tax. As you know, the first person happens to be the electronic liability ledger, ELL. Section. So everyone should, now there are subsections also, students. There are subsections also, but you can just leave the subsection because it's difficult to remember all these. At least remember section 49 for all the e-ledgers which is there with you. Electronic liability ledger, electronic cash ledger, and electronic credit ledger, section 49. There are also related rules, students. If you want to remember it, you can, but you can skip it, up to you. So section 49 and thereafter rule number 85 for the same. Now, students, as far as the electronic liability ledger is concerned, as you all are aware of it, students, in this context, it has the record of what? Record of all the liabilities, in this case, of a taxpayer. Students, be careful. Huh? The wordings are very important. Of a taxpayer. So this ELL keeps a record of all the liabilities of the taxpayer. All the liabilities of the taxpayer. Now be careful, they're using the term taxpayer. So when they're using the term taxpayer, students, in this context, who is a taxpayer? Sorry, not taxpayer. Don't use the word taxpayer. Taxable person is the correct word. Use the word, students, taxable person. Not, there's no term like tax. Taxable person. Now, students, so ELL is prepared for by the, who will prepare the ELL? Students, who will prepare the ELL? ELL will be prepared by the government. For whom it will be prepared? By the government. So government will prepare ELL for the taxable person. Who is a taxable person in this context? Indeed, one is, as you know, it is registered person himself is a taxable person. Goes without saying. At the same time, so there is second category also. Who are the second category? So it's person, which is what? Liable for. Person which is liable for registration, students. Registration. And who is liable for registration? You know, students. That is given to you in section 22 and 24. Section 22 and 24 talks about the person who is liable for the registration. I hope that all of you are clear with this one. Every one of you. Now the point over here is all liabilities, isn't it? All liabilities. Now when you talk about all the liabilities, students, so in the portal, record of all the liabilities, so in the portal, students, the relevant form in which it will be depicted in the GST portal, so GST PMT 01. GST PMT 01. Do not remember the number, students, it's okay. I'm just writing it because what the provision is, so do not remember that. In any case, this portal or this form, students, this form has got two parts. This form, students, has got two parts. Which are the two parts, students? This form, students, has got two parts. Part A, part 1, and part 2. Part 2. Okay. So part 1, students, now please understand, students. This is, as I told you, students, the liability ledger, the government is going to collect it from some information. The government, who is going to prepare the ledgers? All the ledgers, government is going to make the ledgers. For making the ledgers, students, the government will require the information. Some of the information they are getting it through the SSC itself. Now, this information, like for example, the returns which is filed by the SSC, that will give the information. The returns which has been filed by the SSC will give the information, students, in this context. So that is the basis, as I told. And apart from that, there are other particular ways also through which the liability is established in this context. So part 1 is something the government gets the information from the SSC through the return. That is part one. Yes, yes. So what it says, students, part one says what in this context? So return related liability. Return related liability. That is part one. And what about the part two, students? In this context, as I told you, other than return related liability, other than return related liability. Now, I'll give an example, students, over here now. All of you just pay attention. Other than return related liability. Like for example, students, the department is doing the assessment under section 73 and 74. And in the assessment, students, they are raising the liability or they are creating a liability. Isn't it? In 73 and 74, they are then creating a liability. So that is what it is. So you have paid the GST at the rate of 9%. The department says, no, the GST is to be paid at the rate of 18%. So thereby, they are creating the liability for that matter. They are creating the liability for that matter. So that is through section 73 and 74. Now that is not done through the return. That is going to be in part 2. Apart from that, now one more important point, friends. I'm talking about ELL, which is the electronic liability ledger. Now with that ELL, which is electronic liability ledger, the liability, students, is not only from, the liability is not only from what? The liability is not only in respect of the tax. Are you getting this one, students? The liability is not only in respect of the tax, it could be also be penalty, interest. All these are also part of the liability. Are you getting this one or not? So don't make a mistake that you're thinking only about the GST liability. No, it could be also other forms of liability also. Example, I've already given you penalty also. Like for example, students, you have removed the goods from your premises, but in those removal from your premises, there was no e-way bill that you have issued to the transporter. There was no e-way bill that you have issued to the transporter. Now, your conveyance was being stopped in the highway. In the highway, the conveyance was being stopped and the demand for the e-way bill was being put up by the officer who stopped that conveyance. The driver told that I don't have any e-way bill. So what will happen? Penalty would be imposed by the proper officer. He is going to impose the penalty. Now, is this penalty a liability? Yes. Where it will go? In part 2. Where it will go? In part 2. I hope that all of you are clear with this one. That is what this liability is all about. That is what this liability, students, is all about. Right, students? Now, be careful, students. Please understand who is making this particular ledger. Government is making the ledger. So when the government has to make you liable, it means that you are a debtor of the government. You are a debtor of the government. So therefore, the government is going to debit it for the liability. Only then, they will make you as their debtor. For you as a taxpayer is a debtor of the government. So therefore, they are going to debit. So first entry would be of debit. I hope that all of you are clear with this one. First entry would be of debit. So government is going to debit your account. And once the government debits it, then after you make the payment, then the government is going to credit your account. That is therefore the entire point. So therefore, students, in this context, be careful over here. So therefore, the first one, students, in this regard would be ELL, debit, electronic liability ledger debit. So they are going to debit this amount. Information, as you know, would be in part 1 and part 2. So please write. In ELL, part 1, right? In ELL, the government will record the self-assessed liability on the basis of the return. In the bracket, debit entry by the government. Okay, this is what they do. Now, this other than return related liability. So this is outside the return, other than return related liability, which means that this is nothing but the outside the return. Can I say that? For part 2, it is outside the return. So what are the situations? I already gave you the example where the liability is created outside the return. Which are the situation? Situation where the government will debit, where government will debit in EL, where the government will debit in ELL. What are the situation, students? Indeed, these situations are there. I gave you the examples. First one, the liability determined by a proper officer in any proceedings. Liability determined by a proper officer in any proceedings. Example also was being given to you. Section 73, 74, that reassessment. Take one more example of section 62 and 63, which is about the budget assessment. Take that example of 129 about the detention or seizure. 129 about detention of seizure of goods and transit. On that penalty on account of improper movement, students, that is example. No e-waybill, no e-waybill, no e-waybill, students. The second I told you, students, about right, the second one, students, liability which is created by the portal itself. How the liability automatically is created by the portal itself? The classic example is interest. Students, can I say interest is automatically being created by the portal? Obviously, the delay, the portal itself will calculate the liability so far as the interest is concerned. So far as the interest is concerned, it may not be in your returns, but the portal automatically will put up the liability for the interest. At least that can be done by the portal, isn't it? That is the second example over here. What is what we can say? Liability created by the portal. Created by the portal. Yes, Abhi. Interest and late fee liability. So even this is outside the return. Even this is outside the return. These liabilities are outside the return, students. Isn't it? That exactly is the point. Third one, friends, is liability created by liability created by. So this is the liability which is by the registered person. Now, what happens? This is the case is not through the returns, but by paying through that GSTR DRC 03. You should be aware of it. Like for example, I'll just give you an example, students. Supposingly, I have just a second. So over here, students, if you see very carefully, yeah. So supposing, students, some of the supply has not been entered in my books. Now my chartered accountant, when he was finalizing my income tax return, at that point of time, he has given me certain supplies which I have made, which I have not captured in my books. So obviously, if it is not captured in my books, so there is no question of it being captured in my return, and there is no question of it being subject to any payment so far, isn't it? So neither it has been captured in the books nor it has been captured in the return, and therefore there is no question of any payment of GST made so far. So what I did was that since this particular information about some supplies which has missed the entry in the books of accounts of the taxpayer and also in the returns of the taxpayer subsequently or separately he will make the payment of the GST. So obviously the return is all done. Now he cannot change the return. So therefore now what he is going to do, he is going to make the payment separately through GST DRC 03. So that is what this point number 3 is all about, isn't it? That's exactly the point. The liability created by the registered person, not through return, but through GST DRC 03. So what I told you, that certain transactions could not be reported, could not be reported in the return. So registered person voluntarily paid the GST on such transaction. Voluntarily has paid the GST on such transaction. I hope that all of you are clear with this, friends. Avi, Kavita, Aishwarya, that exactly the point. So therefore, friends, this is what it is. So this is what, friends, ELL debit would be. Now, as I told you, friends, if there's a debit, then there's a credit. That's the rules of accounting, isn't it? When the life has got debits and credits. So now the government, when they will credit it, when you make the payment of the liability. So that, therefore, now I'll write the credit part. So the credit part, students, and in the credit, there are certain things that you should know because based on that, some question has been asked in the examination. Which is the question I'll just show you. But first, write that quickly. Point number 2. So just put this particular line. ELL credit. ELL credit, students. So in that context, so this will tell you about what, students? Point number A. So here point number A, students, says that how it will be credited. It will be credited. That's point number A, students. And point number B would be the sequence in which the credit will be done. Sequence, the adjustment. That is point number B. But just first write point number A. In that, students, there are two things. One, which is about what? Discharge of liability. Discharge of liability by the taxable person. So he is discharging the liability, students. Now this is very important, students, point. He is discharging the liability, isn't it? So in the discharge of the liability, students, you will put up what, students? Liability. What is the liability? And then how it is going to be discharged. Two statement. How it will be discharged by the TP. How it will be discharged by the TP, students. These are two things. Now if you see liability, just take the liability as your normal liability, which is about your the forward charge mechanism FCM liability. FCM liability, students. Now, so far as the FCM liability is concerned, now one more point, students. Please pay attention. Henceforth, do make a noting of it somewhere. Students, now up till now, before this topic got introduced, before this topic got introduced, you people were writing like this, that payment by cash or payment through ITC credit. Like that, you were writing the answer. Isn't it, students? Now, students, you now need to be a bit sophisticated in your writing. And your answer should stand out as compared to any answers in across the country. How are you going to write it? Now you'll write wherever it comes to payment in cash. So you'll write what? Payment through electronic cash ledger ECL. Electronic cash ledger ECL. And if it is payment through what, students? Through the credit by utilizing the ITC. So what are you going to write? The payment is through the electronic credit ledger account. The payment is through what? Through the electronic credit ledger account. I hope that all of you are clear with this one. Every one of you. And that exactly the point. So here, students, in this context, what is the case? So please tell me now, as far as the liability which is towards the output tax, which is through the forward charge mechanism, can I make the payment through the electronic cash ledger? Yes, I can, by paying the cash. Can I also utilize my electronic credit ledger? CR is the credit ledger. That is through ITC. Yes, I can. So both the options available for me. Both the options available for me. What about the RCM liability, students? For the RCM liability, you tell me what is available. ECL, electronic cash ledger, only could be done. How about the composition scheme, composition tax? So far as the composition tax is concerned, students, so far as the composition tax is concerned, how do you put up in that context? Composition tax, students, quickly. Obviously, I told you already, we have done the chapter. The rate is reduced. The composition rate is reduced with the condition that you will not take the ITC. ITC will not be given. So therefore, no ITC. It means that the payment, if at all you have to pay the composition tax, it has to be through the electronic cash ledger. Electronic cash ledger. That's exactly the point. After that, friends, other dues. Which is, what is other dues? Other dues is, you should be aware of it. Like interest, penalty, fee, or other amount. Like for example, once you have to apply for advance ruling, so you have to pay the fee for advance ruling, isn't it? Pay for the advance ruling fees. So that is again the example of other tax. So in that context, where it will be indeed electronic cash ledger, electronic cash ledger. That exactly the point. That exactly the point, students. So this is how the things has to be looked upon. So students, Point number 5. Now, students, what about the TDS? The tax deductor will have to deposit the TDS, isn't it? The tax deductor should has to deposit the TDS in this context. If the tax deductor has to deposit the TDS, student, so obviously, how is going to deposit? Through the ECL itself. ECL. In depositing the TDS, can he adjust the credit? Obviously, no. It has to be deposited through cash. That is the point. Same is also for TCS. Deposit of the TCS also, in that case, that has to through the ECL. And that exactly is the point, Shruti. So how do you discharge the liability? So these are the case whereby the discharge of the liability by whom? By the taxable person. The discharge of the liability by whom? By the taxable person. The second, students, is the case when, so first one is about the discharge of liability by the taxable person. What is the second one, students? Second one is about the reduction in liability. Reduction in liability, students, due to other reasons. Due to other reasons, students. Now you say, sir, what is the other reason, students? In this case, I'll give you an example also. So the other reason, students, in this case is, I can give you an example in this regard. One is about, students, that supposingly you have won the appeal, and by winning the appeals, what has happened? Your liability got reduced. Your liability got reduced, students. By winning the appeal, students, your liability got reduced. That is point number 1. Secondly, students, sometimes what happens is that you make a voluntary payment. You make what? Voluntary payments, so as to avoid your penalties. You'll learn the chapter further that is going to come. So you'll know that if I make the payment voluntarily, I will avoid the penalty. So that is how you reduce your liabilities. Therefore, in that particular context, one example which I have given you, demand reduced in appeal. The second example, students, voluntary payment to avoid penalty. Voluntary payment to avoid penalty. I hope that all of you are clear with this one, students. Every one of you. Voluntary payment to avoid penalty. Okay. Now, students, taking the discussion further. Students, this is about the how it will be credited. Second is about, students, what? In what order it will be discharged. So that sequence is also equally important. In what order, students, it is going to be discharged. So that is point number B. In this regard, in what sequence, students? In what sequence or the order in which it will be discharged. It will be discharged. This is also an important one, and on this, the ICI has asked some examination question in this. We'll do it after this is done. So first sequence, students, as you can see, the following order has been given to you. What is the order, students? So this is in respect of, students, old liability has to be adjusted first. In fact, this is also the case when the this thing happens here in the old liability students. Old liability has to be adjusted first. That is point number one. The old liability students has to be adjusted first. Then the current liability. That is the order. So if you see point number A over here, self-assessed. Self-assessed, I'll write return related. Self-assessed, return related. This is point number A. Return related liability. Return related liability of previous tax period. Of previous tax period. Similarly, point number B, students, is about again the self-assessed return related liability of current tax period. And the third one, students, is the other liability. Third one, students, is the other liability, including the demand, which is determined. Sorry. So the other liability, students, which you are seeing, including the demand determined under section 73 and 74. I hope that all of you are clear with this one. Every one of you. That is a sequence. Now, students, based on that, we'll see question number 6 now. Just take a note of it. Question number 6. Let's have a look through, students, question number 6 over here. Quickly. I have intelligently used a space so that I'll tell you one thing, students. Psychology also plays a big role. Did you realize that? If you see, students, any notes or even the ICR material or the past year question or any author's particular notes, the question appears so big that it intimidates you. Did you realize that? It is very intimidating. And you people have not realized one important thing, that we have solved many big questions, be it in valuation, be it in composition scheme. We have done that. All the big questions, we have done that. And you never felt intimidated by the length of the question. You know why the things have been happened? You know the reason for it, friends? Why? I'm using both the sides over here. I'm using both the sides, students. And because I'm using both the sides, the question appears to be small. But as such, when you put it in one length, in this context, the question appears to be very huge. And that huge question plays on your mind. And suddenly you develop a disliking towards those questions. Or you restrain yourself to attempt those questions while you are doing a self-study. But in the examination, there is no second chance. And you will be surprised to know we have solved already in all the topics in past, family, in the other topics, all the big questions were being solved peacefully without getting intimidated. That exactly the point, students. So please see over here. Just a second. Ashwin, Ashwin. So students, examine the taxes. Examine the taxes to be paid for the month of July on the basis of below information furnished by Mr. Zink and Company. Mr. Zink and Company students. Output tax payable. Students, output tax payable has been given to you. Thereafter, the reverse charge mechanism, the tax under the RCM, that has also been given to you. Then they are also giving to you the balance in the electronic credit ledger. The balance in the electronic credit ledger, even that information has been shared with you. IGST, CGST and SGST. Those three particular points have been shared with you. Okay, obviously this electronic credit ledger, the ITC, this is nothing but what? The ITC. The ITC can only be adjusted against the output tax which has been payable. That is the point. Now see over here. Output tax reported under the IGST column pertains to the month of February, which was not paid for the said period. So for IGST, that ITC that you see, for IGST students, the ITC that you see, that pertains to what? The month of February, which was not paid for the said period. Which was not paid for the said period in that context. So students, that is not paid in this regard. Okay. So you are paying now. So see, understand, this was a February month, and whereas we are now in July. So in July, you are paying the output tax for that IGST in the month of July. That relates to the February month. Anyways, that is the point. Now the question over here is that, friends, this is an important question, which all of you should now appreciate. This 14,75,000, this amount of IGST, can I adjust with the ITC of 2652? Can I adjust with the ITC of 2652? There are some information which has been given for the ITC also. Let's first read this one. Also, note that, what to be noted? Also, note that input tax credit available in electronic credit ledger pertains to input tax credit available in the electronic credit ledger pertains to input tax on purchase made during the month of July, and no opening balance exists from previous tax period. Which means what? Please be careful. All the ITC that you see is only booked in the month of July. All the ITC that you see is only booked in the month of July. Do you all agree to this one? Yes. So ITC that you see is booked in the month of July, whereas we have an output tax which is in the form of IGST, which is of the month of February. So therefore the question is that whether the February month liability, can that be adjusted with the ITC of July month? So while I'm making the payment, now when I'm going to make the payment, I'm going to make the payment in the month of July, say for example. So and when I'm making the payment in the month of July of a liability which pertains to February month, can I use my ITC booked in July month to pay off my liability pertaining to the month of February? To pay off my liability pertaining to the month of February? And the answer is yes. Because presently there is no matching concept in GST law. In the old law of excise and service tax, before GST, we had a matching concept. Matching concept means that if it is this month liability, then this month credit would only be used. that some matching concept was there. But here we don't have such matching concept in this regard. So if you are making the payment in the month of July, and while making the payment in the month of July, there are some old liabilities of month of February, which is also sought to be paid now, then while making the payment, you can definitely use the ITC which you have booked in the month of July to pay off your old liability. To pay off what, students? Your old liability. Is that point clear to all of you, students? That's exactly the point. Now, therefore, students, over here, now tell me when you will use your ITC, students. Students, when you are going to use your ITC, when you will make the payment through the ITC, or maybe you are going to make the payment through cash. Whatever is the mode of your payment through ITC or the payment through cash. Please tell me the first payment that you will do or that you are going to adjust has to be what? Has to be for the old liability. Has to be for the old liability, friends, which is self-assessed old liability. So therefore, when you will prepare in this case, so therefore the self-assessed old liability, that same thing provision, self-assessed return of the previous tax period, that is the first in the order. Then the self-assessed current tax period, and thereafter, students, what is the last one, students, in this case? The last one that, students, that you are saying is about demand which is determined by the proper officer, 73 and 74. So this is demand by the proper officer. Now on that basis, students, please have a look. So payment of tax. So payment of tax, students, under the forward charge. The payment of tax under the forward charge, students. Let's have a look. So far as the forward charge is concerned, students, so far as the forward charge is concerned, students, please have a look. You can use both the ITC credit as well as the ECL. So both the credit as well as the ECL ledger would be used to make the payment. So my balance in the electronic credit account is 262, 26,52,000, 18,32,000, and thereafter 18,32,000. So that is the balance as on 31st of July. Output tax, students, IGST 1475, but this pertain to that period of February to be paid now in July. CGST, how much is the liability? 2834, and SGST is 2834. Now, folks, you will learn very soon. And I think in the first class or second class, please recall, I already discussed this part. In fact, you have already captured the notes, if I'm not mistaken, students. The notes also it is captured. Didn't I told you, students, you have to ensure to first exhaust your ITC credit in respect of IGST. You have to first exhaust the ITC credit in respect of the IGST. That is the first point I have taught you, isn't it? So therefore, you have to make it zero. ITC on IGST, you will have to make it zero, students, in this context. That is the first thing. So now you have got, students, 26 lakhs. Kavita? Sure. 26,52,000. So your objective is to make it zero. How you will make it the zero? So obviously, this IGST with IGST first. IGST with IGST. Now, can IGST be adjusted against CGST liability? Can IGST credit be adjusted against the CGST output liability? Yes. Can IGST credit be adjusted against the SGST output liability? Yes. So IGST credit can be used for anything. It could be used for CGST also. It can be used for SGST. So after you have adjusted the IG, but the preference is first IGST and then CGST, SGST in any order and in any proportion. CGST and SGST, we don't have any sequence. Students, CGST and SGST, we don't have any sequence. That this is a sequence that you have to follow. No. Okay. And this is the order that this proportion. No. So here, students, if you see what we have done, first we have done with the entire IGST. IGST liability 1475, output liability. So that I have adjusted fully first from my IGST credit. Okay. Now, second, once that has been done, I still have around out of 26 lakhs, 1475 is through. So I have still around 11 lakhs to play with. 11 lakhs. Now that 11 lakhs, what I'm doing is that I am using it for both CGST and SGST. I can do for entire CGST, I can do for entire SGST, or I can do at any proportion up to me. So here, students, primarily in this particular thing, I'm using it half and half because it doesn't make any doesn't matter as much in this question. But in some question, it will matter. Huh? Some question they will ask you like this, that you have to ensure that the payment results into less cash outflow. The payment will result into a less cash outflow. This could be the kind of question that you're going to witness. Here it will not have any impact because my output liability of CGST and SGST is the same, and my ITC on SGST and CGST is also the same. Because my output liability on CGST and SGST is the same, because my ITC on CGST and SGST is also the same, therefore it doesn't matter at all. It doesn't matter at all in this case. And that is the reason why, since it doesn't matter, therefore what I'm doing is that I am taking half and half. I'm distributing equally in this case. Okay. Now after distributing equally, students, now the balance liability is there. Now how much is balance from CGST and IGST? 18,32,000 still is there to be paid out. Students. No, sorry. So I have got the, in this case, just hold on, students. Just a second. Now your liability is 28,34,000. CGST and SGST liability is 28,38,400. You have paid off 588,500, 588,500. CGST and SGST liability you have paid off by utilizing the IGST credit 588,500 and 588,500 respectively. Now you have got now CGST credit and SGST credit of 1832 respectively. So that 1832 credit is what you are using it now. So after your IGST credit is fully done, has been made as zero. So by virtue of this, can I say it has become as zero? So this IGST become zero now. Once it becomes zero, now you use the other credit of CGST against CGST. Now CGST can only be used against IGST output liability or against the CGST output liability. So therefore the CGST against CGST, it cannot be used against the SGST output liability. Same is also with the SGST credit. So SGST credit, I'm using it against the SGST output liability. Now how much is the balance which I'm supposed to pay off now? For IGST, no balance to be paid through ECL, electronic cash ledger. But what about this one? I need to pay by electronic cash ledger 4,13,000. 4,13,000 is the amount that I've paid. I will be paying through electronic cash ledger towards the output tax. This is for the output tax, students. This is for what? Output tax. Do you all get this one? This is for the output tax, students. Now, with this output tax, students, be careful. I now make the final statement. Be careful from the final statement. Now, what is this final statement? The final statement is about the IGST, CGST, and SGST. The final statement, students, is about IGST, CGST, and SGST. Amount payable through electronic cash ledger under the forward charge. Amount payable through electronic cash ledger under the forward charge. What is that, students? In this context, this IGST is there. CGST 4,13,500. SGST 4,13,500. This is the amount that I'm going to pay through ECL. This is my electronic cash ledger. What about the liability which I'm supposed to pay through RCM, students? Liability which I'm supposed to pay through RCM, that also I have to pay through ECL only. So in that case, students, now you find the RCM, electronic cash ledger, students, 36,000, 144, 144. Now in that case, what is the total amount now under ECL? This is the total. The total through ECL would be how much? 36,000 for IGST. Now for the CGST and SGST, students, how much? 557,500, 557,500. Is that point clear to all of you? 557,500 and 557,500. I hope that all of you are clear with this one, students. Every one of you. So that exactly is the point, students. That exactly is the point. So with this proposition, students, we are through with this completely in this regard. And now then, so this is the question, students, that we have solved. After that, students, the next particular ledger, students, which is about the electronic cash ledger. So the next ledger, students, which has been there over here, is the EC, electronic cash ledger. So again, electronic cash ledger. Same section 49, students. Now, I'm assuming you are doing it, students, horizontally. All these notes have to be prepared horizontally in your notebook. So the length, that width required is huge. Now there are 4 points, students, over here. Let me put up those 4 points first with all of you. As I told you, this would be a record of what? Students, this would be record of what, students? Indeed. Point number 1. Point number 1, students. ECL. Now here, students, what the government will do? Be careful, students. In the ECL, just think logically, students. What will happen? In this ledger account, the amount will be received first. Think logically. In ELL, what happened? Please tell me, in ELL, what happened? First, the liability would be created, and then against the liability, the adjustment would be made. Against the liability, the adjustment would be made in that context. So therefore, there the government will first debit you. In this particular ECL account, what will happen? Money will come in first, and then the money will be paid off. Can you pay off without receiving? Yes. When there is a will, there is a way, isn't it? So here in this account, students, what happens? First, the money will come in. The government will receive the money. And if the government receives the money, what they will do you? They will credit you. They will give you the credit. Think from the government point of view. These entries, who is making? You are not making. As a taxpayer, the entries are made by the government. So if the money comes in, so the government will credit you first. Give the credit. And then thereafter you will make the payment towards tax, penalty, interest, fees, etc. So then in that case, the debit will happen. The government will debit you. In ECL, when the government will make, they will first put up the liability statement. So what they will do, they will make you the debtor. So they will debit you in ECL. And thereafter, once the payment is made, in that case, they will credit you. Think that way. This is such an important thing. That is where students get confused big time. And they cannot appreciate the fine points of this ECL, ELL, and this electronic credit ledger account. That's exactly the game. So over here, students, what happens is that in ECL, in this case, first thing, students, credited by the government. This is credited by the government. So first would be the credit by the government. The government credit rules will be in the normal case. normal credit, or may I say normal case, and second I'll use the word special case. Now what is this normal case, students? Normal case, you are putting in the cash deposit. The cash deposit, as you all are aware of it. So cash deposit in this regard. So deposit through challan, through what? Through challan. That is the point. Second is deposit through permitted modes. Now students, all these are there in your notes. So I'm not going to again write it again and again in this context. I think that should be all. This two only would be required. Deposit through challan and deposit through permitted mode. Have you written this one, students? Perfect. So now, students, what happens over here? First of all of you have to first understand the concept. The concept, students, in this particular context goes like this: that see here, first you will generate the challan, and those who have done, like practically those who have done it, they would know it. In these cases, you generate the challan. Please be careful, now. If you are making a payment for the tax, okay, so you're making a deposit for tax. So what you have to do, you're depositing it for tax. So the challan would be made for CGST say tax. So tax challan is what you will prepare. You will prepare in that count. If supposedly you have to prepare, you have to make the payment of interest. So therefore, that will be the amount that you're going to generate would be for the interest. So you have to be very specific about what you are paying for it. Accordingly, the associated number should be, or challan would be prepared for that particular payout. Same is also the case with penalty. So if you are generating the challan for penalty, only the penalty is what could be paid from that. It cannot be the case where you are generating the amount for penalty and thereafter you want to use this amount to pay your tax. No. So what is the credit that you are making, or you are generating the credit? The debit has to be only for that. What the credit, students, that you are creating through that challan, the debit has to be only for that. Is that point clear to all of you, students, in this context? So if you're making a credit for penalty, you cannot have a debit of tax. This is very important particular aspect so far as these payments are concerned. So therefore, students, herein, just write in this context an example in the scenario. So just write example A. Tax GST, tax CGST to be deposited, then what will happen, friends? Then tax CGST shall be entered in the challan. So if you have to make the payment for tax, so the credit that you will have would be for the tax credit through the challan, because that you're going to use to debit or pay your tax liability, the tax portion, isn't it? That is the point. Similarly, friends, point number B, the interest CGST to be deposited, then which challan, students, that you're going to enter? Then interest CGST shall be entered. In the challan. Students. Now, friends, there is some concept of major head and minor head. Are you aware of that? Major head and minor head, which has been there. Just have a look in page number. Major head and minor head. Let me take you through that concept quickly. Friends, give the page numbering, major head, minor head. Yes. Page 11.3. There, you've written a major head and minor head. Please write. Refer page 11.3. So we will explain it through here. Don't have to copy down everything. It is already there here. Now, major head and minor head, students, if you see it very carefully. Now, what is exactly it is? Major head means, students, you have to pay under the IGST, students, there is tax, penalty, interest under the IGST Act. Under CGST Act also there is a tax, penalty, interest and other payments. Under SGST Act also, students, there is what? SGST or UTGST Act, there is a payment of tax, payment of interest and payment of penalty. So that respective act becomes your major head. So this is your major head in this case. So under this CGST Act, now what you're paying, students, you may be paying under the IGST Act what? Tax, interest, penalty, fee, others. Same way, students, in this context, under this CGST Act, the minor head could be what? When under the CGST Act, what you're paying? Tax, interest, penalty, fee or other payment. Similarly, students, under this SGST Act, for that matter, you will be required to pay what? Tax, interest, penalty, fee, other charges, so on and so forth. I hope that all of you are clear with this one. So each of this particular IGST under that category, you are paying what? IGST tax, IGST penalty, IGST interest. Like that, you have to remember it. Okay, because you are liable to pay IGST. Consequence, the cause. This is the cause. The cause and effect. Minor head is the effect. A cause and effect relationship is established. So because of the cause, which is the IGST that you are supposed to pay, the effect was you ended up paying IGST tax, IGST interest, IGST penalty, IGST fee. Because the cause was that you were supposed to pay CGST, you ended up paying what? The CGST tax, CGST interest, CGST penalty. The cause was, say, the SGST tax or UTGST. The effect was, students, what? The CGST tax, CGST interest, SGST penalty. I hope that all of you are clear with this one, because this part also I am telling you, students, many students are confused. Many students are confused. They don't know what exactly this major and minor head is all about. I hope that now all of you are clear with this one. That's exactly the point, students. So that is how you should be paying. So supposing, students, I have to pay, be careful. I made one intrastate sale, supply. And in that intrastate supply, unfortunately, I didn't raise the e-way bill. Now, I am told to pay penalty in this context. So major head is IGST. Because of this IGST, and now I am paying what, students? The penalty. Now I'm paying what? Penalty. The minor head would be IGST penalty. Because of this IGST which was there, I am ending up paying what the penalty in this case, in this regard. So what I will write, penalty, here the amount is what? Penalty IGST to be deposited. Penalty, here what I'm going to say, penalty IGST is what I'm supposed to deposit to the government. The government is asking from me what? Penalty IGST, penalty primary which is there. Now this is the minor, penalty is the minor amount. Under what? The IGST, because it was the interstate supply which I did. So penalty IGST to be deposited. Then in that case, which they are demanding, so what is challan which I have to prepare for it? The challan that I'm supposed to prepare would be the penalty IGST challan is what I'm supposed to put up in that case. If it is an intrastate supply and I didn't did the e-way bill, intrastate supply and I didn't did the e-way bill, then in this context, here, so say for example, there is a CGST penalty which has been there. Just I'm talking about it. CGST penalty which has been there. Or maybe CGST 50% penalty. So CGST penalty was 10,000, SGST penalty was 10,000. So here CGST, penalty CGST is the major head. So penalty is the minor head and CGST is the major. Similarly, penalty is a minor and SGST is the major head. So penalty is the amount which I am paying under CGST. Penalty is the amount which I am paying under the SGST. In this case, so that is the amount which I need to deposit. So for that, I will prepare two challans. I'll prepare the two challans. Okay. So therefore, the category that you are preparing, for what you are preparing, is it for IGST, CGST, SGST, and in that, what you have to pay off. So major is the category, and in that, what you are supposed to pay off. I hope that all of you are clear with this one. Every one of you, that exactly the point truth. So that is the point truth which has been there as far as the point is concerned. Now coming back to this one, truth. Further discussion. So major head and minor head truth. Page number is 11.3. 11.3. Thereafter, students, the special cases. These special cases. In the special cases, students, TDS and TCS. The steps. Now, if you see from the TDS and TCS also, what happened? The credit has to be given. So, whatever TDS and TCS, students, effectively, can I say the payment would be reflected in my electronic cash ledger account or not? Yes, it has to be reflected. It has to be reflected in advance. The tax has been paid. So, if it is already being paid, so it means that it is already deposited. If it is already deposited, then it should get an entry in my electronic cash ledger that this much pertains to TDS and TCS, which also should come into my this thing. The credit should be given to me of the TDS and TCS deposited by the deductor or deposited by the collector, as the case may be. The credit has to be given in this context. Where the credit will go? In ECL. The credit of the TDS and TCS will go in the ECL first. And from there, finally the adjustment will be made. So here also shows TDS and TCS. What is the step that happens over here in the context of TDS and TCS? So tax. So here, who is the person? The tax deductor and tax collector, students. He is going to deposit the GST. He is going to deposit the GST with whom? With the government, filing the return. Will they be required to file the return, students? And the answer is yes. GSTR, I think GSTR 7, GSTR 8. That he will have to file by 10th. Section 50 and 52, which we will see in this chapter itself. Don't worry. So he will be depositing it, and then the GSTR also would be filed by them. Now, obviously, the government with that return, they are going to auto-populate students in that particular context. So that auto-population will happen in this regard. And through the auto population, the supplier from whose consideration the TDS was deducted or the TCS was collected, that supplier can see now in the system that this, like just like 26 AS, I can see it in my system, students. That 26 AS, the credit which is there, same thing I can also see over here also through this auto population. And the last one, students, as you know, once I can see it, students, what I'm going to do, I'm going to validate that yes, in this transaction, this is the TDS and TCS which the recipient has deducted or collected, as the case may be. So I'm going to validate it. Once it is validated by me means the supplier, then accordingly, students, once it is validated, I said that yes, tick mark. Then what happens? It will be then posted by in the ECL account. Once I validate it, it will be posted where? In the ECL account. Posted means it will be credited to my ECL account. It will be credited to my ECL account. That is the steps. So Shruth, please write. Over here, Shruth, in this context. Tax deductor or collector. What they will do? They will deposit GST, TDS or TCS with government by filing return, which is section 51 for TDS. Or this. Let's put it like this. GSTR 7th by 10th of next month. That is section 51 for TDS. Then GSTR 8 again by 10th of next month by section 52. This TDS. Different. After that, details of deposit auto populated and made available to the concerned supplier. To the concerned supplier. And the last one, when validated by TP, then what happens, friends? TDS or TCS shall be credited to his ECL by the court. So this is the first credit. So first, what will happen in the ECL? First credit and then debit. That's point number 2 now. First credit, students, and then debit. Is that point clear to all of you? That is exactly the point. So first credit and then debit. So now coming to this particular proposition, students, please come over here. So this is the first credit, and now you come to this. Second one would be what? over here the set off or debit against other dues, against tax or other dues. There are 4 points. By the way, students, it will stretch. That's the reason why I told you to prepare it in the notebook, because I will requiring the bit 3 and 4 is also there. So what we discussed, students, this is first credit, then first credit, then debit. That is what will happen in ECL. That is what will happen in ECL, students. So here, students, for discharge of tax dues or other dues, so students, what will happen in this context? Manner of utilization is the case, students. The manner I already told you, already discussed, students. How is the manner of utilization, students? We discussed already. If the deposit that you have done, students, please tell me if the deposit was done for what? Challan that you prepared now earlier. First you did the credit. Now you have to do the debit. So the deposit that you have done, where? Over here. This. See here. Put the star mark, students, over here. Put the star mark over here. And just put up again over here. So, what exactly is the point, students? So the deposit was for CGST. So major head is CGST, minor head is tax. So deposit was CGST tax. So major head CGST, minor head is tax. Then in that case, what we are going to say in this case? So this shall be used for. So debit would be for, use means debit. Debit would be for what, students? So debit in this case would be for CGST tax. Same way, if the deposit was for CGST interest. So major head CGST, minor head interest. So it shall be used for, debit would be CGST interest. Now students, many times in the examination they'll ask you this, the deposit for which the challan was prepared was for CGST tax. And the SSC wants to know that whether he can use it for CGST penalty or not, and the answer is no. And the answer is no. We know that. But just imagine that he feels that very strongly that look, I have already an amount. See, it's like a deposit. It's just like my bank account. So I have already a balance of say 1 lakh in CGST tax. Presently, I don't have any liability to pay for my tax, CGST tax. But as I told you, the e-way bill penalty was imposed. So CGST penalty is 80,000 which I'm supposed to pay. Now I don't have a cash to pay right now, but there is a CGST deposit. In that CGST, there's already a deposit of 1 lakh. The question is this, that can I transfer this particular amount from the tax to the penalty. Can I do that? And the answer is yes. See, they have to make it business friendly. So if you are already having an amount which is lying where? Lying in the deposit account. Already an amount which is lying in the deposit account. Which account? GST tax. You don't require that particular amount in this case. So in a way, what they will do is that, in a way, through the backend or through the portal, they will allow you the refund, but it is not an actual refund. It is a refund which is done through, like, you are trying to remove that amount from that tax and then you are putting it where? In the CGST penalty. So in a way, you are getting a refund, e-refund. May I say e-refund? So it's more like an e-refund that you get it in this context, and then you put it where? In that particular, for the, again, you create for the CGST penalty. So then you create a CGST penalty, and that exactly is the point. So therefore, friends, over here, which you're going to put it, is right, point number 3 in this regard. Point number 3. So now 2 small points are there. Yes. So point number 3, transfer from ECL CGST by registered person. So what would be the scenario in the transfer entry? What would be the scenario? In the transfer entry students, these are 2 things. First, I told you e-refund. In this case, so in this case, there are 2 cases of transfer. Let's focus on the first case itself. In this case, transfer within the same GST, means the same person wants a transfer, like it's me with the GST registration same number. Okay, I want now from CGST tax and need to pay off my penalty, so I need a transfer. Okay, so what I'll do, it is like, first they will unlock it, they will remove it, and then they will pay it off. That is what will be the case. So therefore, from the system, it has to go out now. So it's like an e-refund that you're going to get. So what will happen over here in this context? Herein, deemed, or may I say, deemed refund or e-refund. Deemed refund or e-refund. What is your deemed refund or e-refund in this context? Now this is through the form GST EMT09. The form is okay. We do not remember all these things. Still fine. So over here, students, ECL, CGST in this context. In this context. So in that CGST, you tell me in this case. So this is my major head. So I need a transfer in that particular case. So from tax to, in this case, from tax to penalty, I need to pay off. So I can have or may I have to pay interest. So in this particular head of electronic cash ledger CGST, I can transfer, students. In that situation, I can transfer any particular GST. I can do this, which means that tax, interest, penalty. Any particular transfer will be undertaken in this regard. Any particular transfer, students, will be undertaken. So once that has been done, in this case, students, what will be the situation? First, there will be a deemed refund. So that will be the case, students, in this context. So that first you need to refund that particular amount to that particular form. Thereafter, students, once the refund has been granted to you, that okay, that tax you are taken the refund of it. Thereafter, there will be a deemed deposit in which account? For the account that you want to pay. Now, therefore, in my example, CGST tax, I now need to pay for CGST penalty. So, therefore, first step A, I have taken the deemed refund by through the form CGST PMT09. So, I got that particular deemed refund. From that, I have removed from CGST tax now. Now, that will get transferred or deposited to the CGST penalty. That is this point number B. So, deemed deposit, students, in this context, ECL, any GST. In my case, students, the penalty, I need to pay it in the penalty part. In this context, so deposit where, students? Deposit in the penalty. Deposit where, students? Deposit in the penalty part. In my example. If I have to talk about my example, students, so I've removed from tax from here. And here, students, in my example, point number B. So point number A for the tax, point number B it is penalty. Is that clear to all of you, students? So in the first particular case, in my cash ledger of major head CGST, I got the e-refund of tax, which is a minor thing. E-refund of tax, students. And in the second case, what happens? Now I'm depositing what? The penalty in the same module, in the same CGST, which is the major head. I am depositing it for penalty. In the major head CGST, I'm depositing it for penalty. Is that point clear to all of you? I'm depositing it for penalty. Right? This is how, students, you do it. You all are through with this one now. Now this point number B, students, is about, say for example, now see there are assessees. Yeah, same GST. This is the same GST example. So the example that we have discussed just now, students, was in respect of same GST. Transfer within the same GST. Now here, say for example, my branch has to pay. Say for example, I have a huge, I told you my example, I have already a tax deposit of CGST of 1 lakh. I had a huge balance of CGST of 1 lakh today. I don't want to make any payment at this particular point of time. I don't want to make any payment at this particular point of time of the tax in CGST. But my branch has made some intrastate supply. And that branch is a deemed distinct person, section 25. That branch is a deemed distinct person. So same PAN but different GST number. Same PAN but different GST number. Now they want what, students? They want that particular, they want the amount, and they are running into a cash flow position. Severe cash crunch. And that's the reason why they want that credit which I have in my ECL to be transferred to them. They want, students, in this case, the credit to be transferred to them. Is that possible? And the answer is yes, students. That's exactly the point. The point number B, students, is about what? In this case, transfer to another GST IN. Okay, another GST IN, but with the same PAN. but the same path, students, and that's exactly the point. So first I need to, again, the same process. What is the same process? Point number A, get the refund and then do the deposit. So that is exactly the point. So deem refund. First thing would be deem refund, which is again the GST PMT09, and thereafter, students, thereafter what? In this case, now the electronic cash ledger, CGST. My, in this case, so once I get the refund, now I'll deposit what, students? Deposit primary, deposit with the DDP, deemed distinct person, students. Where it will be deposited? Either CGST, major head would be CGST, or it could also be IGST, students. Obviously, no? CGST, which I have put up, that could be used for CGST, or CGST go for IGST also. So that is where I can put these two things, but not for SGST, yeah, students. That is one thing you should always be aware of. So I hope that all of you are clear with this one. Same process. First, try to recover that amount, e-recovery, and then transfer. E-refund, thereafter transfer. I hope that all of you are done with this. So this is your point number 3. And now, students, in this particular context, once you're done with this, go to our last particular point. And that last point is also known to you, students. Everyone. Point number 4. Students, point number 4 is about refund of unutilized balance. Refund of unutilized balance. Students, please understand, now this would be a very important point which will be compared with the refund of, students. That will be compared with what? With the refund in the electronic credit ledger. That is the refund of ITC. And you will really appreciate the refund over here. Please, you can write compare with refund under electronic credit ledger. Compare with the refund under electronic credit ledger. Now this part, as far as here it is like a cash deposit. ECL, if there is a excess deposit, can I get the refund? I don't want it. Like, say for example, students, I'm closing my business. I'm closing my business now. Can I get the refund of the amount? Obviously, that is my money, which is put up excess in that ECL account. And now tomorrow, if I don't have any liability, because example I've already given to you, can I get the refund of it? The answer is yes. So therefore, students, this compare with the refund under electronic credit ledger, because that's in that particular case you don't get an outright refund. There is no concept of outright or inherent refund there. Here it is, not there. So students, over here you can write inherent right is there. That is point number 1. Always refundable. So if there is an excess money, it is always refundable. Why I'm writing this? Because that I will end up comparing it with the refund under the electronic credit ledger. Claim of refund through application. So unless you make an application, you will not be getting a refund. Just put it across. We are done with this. Okay, students. Students, tonight also I will have a lecture with all of you. Tonight also, students, we will have a lecture, because tomorrow we will not be having it, because tomorrow then I'll going back to Mumbai, so I'll be traveling tomorrow. So tonight I'm going to have this session with all of you, students. Then we'll do some more practical questions tonight. Class 9:30, students. Tonight we'll meet up at 9:30. Is that fair to all of you, students? Everyone. You then, students, at 9:30 tonight.